Hi everyone. Today let's talk about Robert F. Kennedy announcing an independent bid for president. Then we'll take a look at the two things eating away at U.S. incomes. Then we'll take a look at the data, as well as the charts, and my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Robert F. Kennedy announced that he is running on an independent bid for president. He ended his campaign with the Democratic Party. It seemed like they were kind of out to get him based on some of the things that I've read. They weren't providing him security as a presidential candidate. They also weren't really acknowledging him in a primary to try to run against Joe Biden. So he has now announced that he's going to run as an independent. And I do think he's going to garner some support. Biden is pretty unpopular based on the polls out there, and I would guess that this pretty much locks up a bid for President Trump to retake the White House. He's currently leading the Republican primaries by quite a lot, and if Robert F. Kennedy is successful in splitting the Democratic Party really to any extent, that would pretty much take Biden out of the running and leave it wide open for Trump, as long as he ends up winning the Republican primary, or really any Republican candidate, as long as they don't fracture the way that the Democratic Party is fracturing right now. Looking at some of the comments that he put out in his speech, he said that there is corruption within both parties, but he did mention specifically that the Democrats are basically keeping him out of the running, not giving him a fair shake against Joe Biden. They also mention here that President Trump mentioned that RFK is a very smart guy, quote unquote, and that he has struck a nerve with Democrats, and a lot of Democrats actually want to vote for him, again, potentially speaking to a splitting of the Democratic base, similar to what happened to Hillary Clinton and Jill Stein in the 2016 election. In terms of an economic perspective, he seems to be more free market than the mainstream Democrats, leaning more towards the right, which is probably why they're not acknowledging him, which could be beneficial for the economy as a whole. Obviously, this is pretty far off, but it is a big development, and it's worth knowing. Moving over to things eating into U.S. incomes. Basically, it's gas and interest rates. As those continue to go higher, this is percentage of expendable income. And you can see both of these together sitting around 5% total, eating into Americans' incomes, which is going to slow down the overall spending and consumer base if they have to spend more money on things like interest and gas, which are not really discretionary. It's also worth noting that the bottom 80% of households have expended all of their excess savings, going back to the period during COVID where we had all of this excess over that 100%, and now they are below their original mark going back to March of 2022, but the top 20% are still sitting on a little bit of extra money. Moving over to the economic calendar, nothing for today, 3-year note for tomorrow, Fed Waller speaking tomorrow as well. Don't forget, anything you hold overnight is going to be affected by core PPI, which comes out at 8:30 on Wednesday. You also have the 10-year note auction in the afternoon, as well as the FOMC minutes. Should be relatively uneventful in terms of news for tomorrow, but Wednesday definitely will be. Moving over to the earnings calendar, I forgot to talk about it in the weekend video, but we are getting to that time of the quarter once again. We got PepsiCo here on Tuesday, tomorrow, Delta Airlines on Thursday, United Health on Friday, JP Morgan, Wells Fargo, BlackRock, Progressive, Citigroup, PNC Financial, and Charles Schwab on Monday of next week. So getting started with those airlines, Domino's Pizza also in there, and then mostly just bank stocks. Moving over to Max Payne here just for a moment. You can see it's currently at 426. We're above that now at 430. Total options still basically at 700,000. Put wall 420, call wall 435. I would expect to close between those two levels. 435 is pretty close now. That's only about 1% higher from where we are now. And it wouldn't surprise me if we finished right around that 430 area, basically where we are now. Again, not a ton of options here for Max Payne, so it doesn't hold a ton of weight, but you do have to pay attention to it, at least a little bit. Moving over to the charts, starting off with the S&Ps here. Hourly chart, gap down, found support at the 144 on the hourly, rallied up throughout the day. Pretty big on the day, 0.64%, right at that daily VWAP, sitting at 433.31. Got pretty close to that level before breaking down just a little bit at the end of the session. You also have the 21 EMA sitting at 434.36. The question is this going to be resistance right at the trend line, or are we going to get that big overshoot, probably to the 55, pull back, hold the 21, and then rally up? Also another possibility. It's worth noting just how little volume there is through this area on the move lower. You can see we gapped through that area previously, right at this previous consolidation. If it's going to happen, I would expect that to happen fairly quickly. It's also worth noting bullish momentum for the first time here in several weeks. Volume, not super great for a confirmation rally, but it is a close above the previous body. It is a bullish candle, so you have to respect that. We got above 431.71. Holding above there. So in terms of zones, 431.71 up to 435.88. I also have a trend line in here around 434, and you have to watch the daily 21 as well as VWAP. Moving over to the Qs on the hourly and the daily, similar thesis to the SPY, gap down, touch my level right at 361.58. Held that level, rallied up through the next one, almost to 367.63. Didn't quite do it, so the zone now is 364.84 up to that 367.63 level. We're above the 21 and VWAP here on the NASDAQ. Watching that 55 EMA at 368.77. 2 days of bullish momentum here in a row. I would expect at least another one, maybe two more here, just like we saw. Big push, find some resistance. Maybe we get all the way up to trend. That would be pretty aggressive. That would be up around 375.58, certainly possible. Right now, everything is still bullish. Again, volume pretty low. I would like to see that go a little bit higher on a continuation, but overall, everything looks good. Moving over to the Russell and the Dow, similar thesis to everything else, gap down, rallied throughout the session. I was a little concerned on these a little bit more than the SPY and the NASDAQ. These have a bunch of other stocks that are less tech heavy, but it ended up following through here. Bullish momentum, couldn't quite get to the 55 on the 4-hour for the Russell. Overall, still a bullish close. Dow getting right to that 55, just above my level at 335.91. Also right at that highly traded zone. You need to see it get above this level here at 336. If it can hold that, 339.11 would be my next level. But this is a critical one. If it breaks down, that could be quite bearish. Might end up looking for like a double bottom down at 339.40. That would be interesting. Russell, on the other hand, already pulled back to these previous lows, and it does look a little bit cleaner. Looking at the equal weighted just for a moment, confirmation candle, almost bullish momentum, RSI continuing higher, got above the 9, held above 140.24. Everything looks clean up to the next level at 142.50. And once we get into that area, that'll be the interesting zone. If we pull back from there, double bottom and then rally, or if we're going to push up through there more strongly. Moving over to Apple and Tesla. Apple got another bullish day, bullish momentum. Tesla also bullish momentum, but not a bullish day. Gap down, couldn't close above the previous one. We're watching that key resistance at 264.68. You have trend line just behind it. Critical area needs to break through here if it's going to go higher. Apple, on the other hand, closing above 178.58. Got the 55 EMA sitting at 180.41. Again, needs to get above that. Could overthrow it like this and then eventually break down anyway. But critical level here, and I would expect at least a test of that level tomorrow. Moving over to staples and discretionary. Staples continuing to hold 66.27. Interesting. We've been on basically a very slow grind down, but we've kind of stalled at this level. Nice little bullish candle on the day. Looks interesting at this level. Discretionary seems to have been consolidating in this zone right up to that highly traded level at 161. Need to see it break above that 162 level. Bullish momentum, bullish RSI. Again, want to see that breakout confirmation. Hasn't happened quite yet. Moving over to energy and oil and gas. Energy had been breaking down, gapped up with the news over the weekend in Israel. Similarly, oil and gas also jumping higher. Momentum on both of these starting to tick back towards bullish as people anticipate energy prices are likely to go higher. And just like we talked about in the opening, that is starting to play a much larger part in people's budgets. Moving over to breadth here on the 50 and the 200. 50-day average continuing to confirm this rally up. We got above the 21 EMA here. The question is this a move like the end of August where we got 4 days in a row, hit that level and then broke down and then eventually continued lower? Or is this going to be a push back up into this 40 area and maybe even ultimately back into this 92 area, which would definitely be resistance if we got there? This does look pretty powerful, but so did this move here in August. The big difference here is this candle on the 200-day. big candle, 9.24% on the day, bullish momentum, bullish RSI. Haven't seen that in a while, and it does look pretty good, at least to the 21 EMA around that 42 area. I do have some resistance around 45, but if we can get through this zone, then you have the 144 sitting all the way up at 52.66. Typically, the 200 does not move in straight lines. We kind of get waves as we go, and I wouldn't expect to see this push all the way through in one pass. The question is, where do we see at least a little bit of a pullback and maybe a higher low setup? Moving over to yields on the 2-year and the 10-year, massive breakdown on both of these. 3% on the 2-year, 3.47% on the 10-year yield, closed right on their lows. This is exactly what you would want to see if you want to see equities going higher. So awesome confirmation. We saw these wicks. We did not get the confirmation until today. 2-year, we talked about this consolidation, not really knowing where it's going to go, but this is a pretty clear indicator here now. Obviously, this could snap up from here, but we are below the 55. Bearish momentum, 10-year yield breaking below the SMA on RSI, and this looks pretty weak, much weaker than it has here recently. Moving over to the dollar. Dollar rallied up overnight, broke down throughout the session. We're below trend now, which is interesting. We haven't closed below that really throughout this entire run. We got below it just briefly to test the 200 SMA on the daily chart, but this is significant. Bearish momentum, and it does look like we are going to go a little bit lower. You want to see that 21 break and then 155.50 break. We're not quite there yet. You might see a little bit of a pop higher, maybe a double top or a lower high setup. That could be interesting on the daily chart. But right now, this still looks quite bearish in my opinion. Moving over to bonds, got a massive pop on both of these. JNK up 0.74%, TLT 2.35% on the day, massive gap up, rally right to the 9 EMA. Obviously, this has been a massive sell-off, but look at this volume here recently in this most recent fall. This could be the capitulation move. This could be a potential indication of some higher highs to come. We saw yields falling today pretty aggressively, and that could be a good indicator that we're going to see bonds going a little bit higher in the near term. Moving over to the volatility indices, move index breaking down. VIX, on the other hand, gapped up with the down move that we saw early in the session, fell right down to that 200 SMA. So you could argue this is still a bullish candle here. It did technically close above the previous close, but momentum looking weak, RSI looking weak. And this is not necessarily what you would want to see if it was going to go higher. And realistically, at this point, I would expect it to move down into this 1650 area, right at these previous highs. Moving over to my accounts, you can see I made a little bit of money here. I didn't really do very much with my positions. I did roll this 174 out to Wednesday for 84 cents. You can see I ended up net profit $113 in that account. Qs 308 on the day. I ended up rolling these calls again. I did it actually at a pretty good time. Took a little bit of profit on the previous calls, rolled those up and out for basically the same price, and then the NASDAQ basically took off from that position. I had those puts going into the day, which I took profits on. I also rolled those out to tomorrow, took profits on those, and then ended up closing them. It did look a little bit weak at the end of the session, which was concerning. I would like to see at least a little bit of a pullback to get into some puts during tomorrow's session, but I'll definitely keep an eye on it. If we get a breakout, obviously I'll pile into that at least a little bit more. Or I can just continue to roll these calls out day by day. We'll see how that plays out. Right now, my max profit on this position is 365, and the Qs are all the way up at 366.56. Overall, I still have a bullish thesis going into tomorrow and probably Wednesday as well. Let me know down in the comments section what you think of RFK Jr. running or the depletion of the US savings accounts for the bottom 80%. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.